Hi, everyone. Welcome to another episode of the LATAM Stocks Podcast. I'm your host, Patrick Flood. Today I'm speaking with Fletcher Kosut. Fletcher is the managing partner of Buzios Consulting, which is an executive recruiting firm specialized in the Latin American financial services industry. He regularly posts interesting job opportunities on LinkedIn. I see him all the time that are directly relevant to the LATAM Stocks audience. So executive level jobs in investment banking, economists. So I'm really excited to talk to Fletcher today, get his perspective on LATAM financial services and the job market. So let's get right into it. Hi, Fletcher. How are you?
Patrick, how are you? Thank you for having me.
No, thanks so much for doing this. So before we get into financial services stuff and a little more about Buzios, why don't you tell everyone a little bit about yourself? Where are you from? How'd you end up doing recruiting?
It's a very strange path, but I arrived in LATAM. I got into the Latin markets in 96. Prior to that, I was actually playing hockey for a living. In my last couple of years, early 90s, I was out in Las Vegas and I came home. My hockey career was over. My father asked me, what were you going to do? And I said, I have absolutely no idea. So I got a job in New York. I worked for Xerox for 2 years. And the reason I worked for Xerox was because at that time, they still may have it. They had an exceptional sales program, teaching, etc. And I wanted the basics. I wanted the hardest possible industry in sales I could do, which my father pointed out was copiers in New York City at that time. So I did it. And I did it for about 2.5 years. Enjoyed it, loved it, spoke to everyone from CEOs to all mid-cap companies, everything. I was able to really learn a lot about people. You saw the spectrum of everyone. And it was great. It was a great learning experience. I loved my time there. I was growing a little bit bored with it. I did exceptionally well with that. And then out of the blue, a girl I went to high school with who was a couple of years older than me, who I knew but didn't really know, calls me up one day. She was working for a mid-sized executive search firm in New York City, and she was covering Latin America. And this was relatively new. You're talking about 93, 94, 95. And she asked me if I wanted to join her as part of her team to build out Latin America. And I thought about it and I said, geez, it's got to be, how much harder can it be than what I'm doing now? And so I said, yes, I took the job. I have to tell you, it was easy in this sense. And I think a lot of people forget about this. If a lot of your listeners were even born then, in the mid 90s, you probably had anywhere from 30 to 35 global banks, boutiques that had Latin American equity platforms. It was enormous. James Capel, Caspian, Robert Fleming's, you had Lehman, you had Bear Stearns. It was incredible. The downside was you didn't really have technology. You didn't have the technology we have today. We didn't have email was just born. Email and the computer was just getting off the ground. So back then in the late 90s, you were calling people. You were calling analysts on the desk. You were calling people, on the phone. And cell phones were just sort of also really sort of getting off the ground as well. So you had to call people during work hours. You had to share, the jobs you were working on. For me, it wasn't that hard because I had been doing that for a couple of years prior. What had scared me early on was, just like anything new, you're trying to learn your craft. You're catching a senior. You may have to phone someone who's a senior II ranked cement and construction analyst, and you're trying to share a job, and they're throwing questions at you back, like, what's the management structure, DNA? What are we doing here? And you're like, whoa, I just want to give you the opportunity, but you wanted to be well-informed. You wanted to give as much information as possible so they didn't have to ask those questions. And that's something that I've taken with me to this day is I try to give candidate, whether it's an associate role, a sales role, a banking role, I try to throw, especially on the first or second interview, I try to share with them as much information about the hiring manager, the silos of management, the culture of the bank, the role, more specifically what they're looking for. And the reason I do that is obviously I'm looking to be successful with that placement, but at the same time, I want them to go in there because they are an extension of me. Those are candidates I'm representing. So the more they're informed, the better off they're. And listen, it may not work out at the end of the day, which is fine. It happens all the time. I don't ever want a a hiring manager come back to me and say, Fletcher, these people were terrible. Did you even vet them? I want them to say, wow, they really knew, they asked the right questions. They were, that to me is very important. And that to this day is something I still take pride in, is giving as much as I can within reason before those interviews start. And I have now the advantage of being a lot older, and 30 years of covering Latin equity markets. I've seen such changes in these banks, managers, how things are done. It's also very easy for me not only to talk about the specific mandate I'm working on for that particular job, but I can give a history lesson on a specific bank. This is what they've done the last 2 years, the last 6 years, the last 10 years. Yes, they wanted to do this back in 2009. It didn't work. I can give them a whole history lesson of the bank and the people who have been there, which really helps later on also in the process.
Yeah, so let me push on that thread a little bit then, because one of the things I hear regularly when I talk to people about Latin American markets is kind of, especially in Brazil, a regulatory change that happened a few years ago. And now there's all these new types of credit institutions, and the central bank's much more open. So I'm curious if you've seen like a proliferation of job types or new financial institutions, new types of companies that have started to pop up in Latin America over the past 5-10 years.
The one thing that really, and it wasn't the new regulatory policies that have really crushed not only Latin America, but have crushed the global banks, the global markets, has been MiFID II, Basel. It's taken equity research, global equity research, and has chopped it in half. And it's becoming less important. There is a need for it. You're always going to have it. But about 5, 6, 7 years ago, when it really came out and it was truly enforced, you started to see managers slowly, unless you're JP Morgan, unless you're one of the top 3 or 4 banks, we'll stay away from those guys. But the average middle of the road banks globally had been crushed. And that's when you really started to see the juniorization of analysts, salespeople. And I got it. I understood that. The days of the early 2000s, you're not going to see those comp levels anymore. And those numbers have come down. Seniority has come down. Some banks have tried to move away from research as much as possible, while at the same time keeping some of it. They've gone more to a trading platform, a trading culture, which has been successful. But research, you're always going to have. It's become very juniorized in the last handful of years. I don't think that's going to change too much. You really haven't seen it hit too hard in Brazil, only because, and here's the funny part, you always have buy-side clients complain that, wow, your research people are so junior, they're not really putting out a good product. What are you guys going to do about it? And the salesperson or sales trader would say, well, you don't pay for it. You don't pay for this research. You're paying us $100 for a half an hour. Like, there's no money in it. So you get what you pay for. I don't know if that's going to change. I still think research is important. I get that you have, for cost cutting purposes, you've moved back from that. I still think the best method is to have 1 or 2 good senior people on those research groups and surround those people with very good junior people, good number 2s, people that are energetic, that can move up. You still need someone you can market around, whether that's a strategist or a big II person. In the early 2000s, late 90s, early 2000s, I used to do a lot of work with Bear Stearns. And this would never happen today, their Latin American equity research team was they were the New York Yankees. All 9, 10, 11 guys were II ranked. They were the best of the best. People loved them. They were great. The team was great. And this was during a time where they didn't really have equity capital markets. They didn't really have dedicated banking. They relied truly on secondary commissions. They had a phenomenal sales trading team, a phenomenal research sales group and desk. They were just a phenomenal bunch of professionals. Now, times have changed, and the markets have changed. And I don't think, if Bear Stearns, and again, I truly love them and I love the way they did work. I don't think that would happen today. I don't think the market conditions would allow for a Bear Stearns to be successful in this day and age.
So where have the best Latin American research analysts gone then? If they're not at most of the banks, are they all in the big banks? Have they gone to smaller buy-side firms? Have they gone independent, or do they just not cover Latin America anymore? Where do you find the best research now? The best professionals?
The best people have gone to the buy side. They've moved on. A lot of the really good people have gone on to, it's either buy side, and I'll get into that more in more detail. A lot of them become CFOs, COOs, CEOs for small companies that they had covered at one point, or new people. They have gone into IR. I think there was a lot of frustration in the last several years of people just not getting paid the way they deserve to get paid. And listen, you're not getting paid every year to your expectations, but it's some of that's out of your hands. There's nothing you can do. And I think that frustration grew with a handful of people. And they said, listen, I'm not going to do this anymore. I'm going to try something different. And they've moved on. And I still think quality of the research is there. I think it took a dip after COVID because I think a lot of people moved away. A lot of people, we touched on this a little bit. People, they looked to do different things. They just got out of it. And what happened was you had all these research teams with very juniorized people. The problem you had during COVID and just after COVID was these young people, as good as they were, they needed mentors, they needed coaches, they needed managers that could sit with them and say, listen, hey, John, you're going on a marketing trip? Yeah, I'm going to speak with some of these people in Scotland. Do you know these guys? How do I approach them? What's the best way to get my message across? And no one was there. People were talking on the phones. And I think a lot was lost in those probably 2 or 3 years. I don't want to say a generation was lost, but I think the research product really got hit from, and I think that happened to everybody. There was not one bank that stood above the others. I think everyone got hit. I still see sell-side analysts, and this has happened for 30 years, and it'll happen in another 30 years, sell-side analysts trying to trade the market. And what I mean by that is every 2, 3, 4 years, I see sell-side guys saying, listen, I've had enough of my sell-side career. I want to go to the buy side. Because at that time, the sell side's starting to shrink. Maybe rates are higher, global conditions aren't in favor, so they're looking to go to the buy side locally or wherever they may be. Then 2 years later, 2.5 years later, the markets change again. They want to go back to the sell side. So they try to trade the buy and sell side approaches and sell side mandates. That still happens. There's no issue with that. I think at times, analysts become better analysts if they're coming from the sell side, go to the buy side. It's a different approach. It's a different way of looking at companies. I think that helps them. I wouldn't say do it every 3 or 4 years because it's going to show up on your CV and people are going to say, I see what happens here. You jump all the time. But I think it's important that sell side and buy side analysts have a little of both. Sell side is much more aggressive. It's looked differently. It's looked upon differently, and buy side is looked upon differently. So I see the pros and cons, but that's the big thing I still see today.
Cool. So let's talk a little more about Buzios then. So what's a typical job opening look like for you that you look to fill? What's the role? What's the experience level? Who's hiring? Can you tell me a little more about projects you work on?
Yeah, a lot of the work early on when I started covering Latin America, I had done a lot of equities. Actually, that's all I had done was Latin American equities and fixed income. When I created Buzios in 2009 and went off on my own, I did a little bit of the fixed income side, not as much. I started building a name for myself in the equity and investment banking side of it. And that was big enough, even buy side. So I stuck with that. And I just felt it was more at the time. I felt more comfortable with the equity side of the business. On the investment banking side of the business, it was more profitable. To be truthful, the comps are a bit higher at that time. They were a bit higher than on the fixed income side. So I stuck with that and I built that up. Occasionally get some fixed income mandates. And if I can do it and I'm familiar with it, I'm happy to do it. I'm happy to share what I have because just because I don't do as much on the fixed income side doesn't mean I don't speak to fixed income people. I speak to everyone all the time as much as I can. I'd like to receive and share different information, what people see on their side of the business, in their part of the region, in their part of the world. It just makes me more informed, but makes me a better recruiter. But I try to tell people up front, I always share up front, like, listen, I will do my best. I'll reach out to some people, but if I can't do it, I can't do it. It's not my strength. And they're very good about that. I always like to be honest up front with people because I don't want them thinking, Fletcher, where have you been? I want them to know exactly where I stand before I take any mandate. Most of the work I do is going to be and has been all under the sort of the Latin American cash equity product area. So that's going to be sales trading, research. And then on the investment banking side, ECM, origination, M&A. And they're broken down, obviously, in different silos of product areas. But that's my strength. That's what I've done. And that would cover throughout the region, Brazil, New York, and London.
So we talked a little bit about the changes. So maybe this question's a little too general, but let me ask you about the typical profile or a career path of these people that you're recruiting for equity. So are there certain feeder schools or certain programs that you look for? Is there particular experience? Do they usually start out as an intern and then take their first job? What's a career path look like for someone that ends up as a research analyst in Latin America?
It's funny now, I look at the CVs coming out of school and they're all the top schools, whether they're in Brazil, London, or New York or the US. The pedigree of these kids, and I say they're kids because they're still kids, is phenomenal. They're driven. They're very impressive backgrounds. They're driven and they look phenomenal. When I started in 95, 96, and global banks, the global markets were just scratching the surface of Latin America. I remember a colleague of mine placing a person in New York in Latin American equity research because they had a couple of accounting skills in college, but they only spoke Spanish. And if you could speak the language, you would be hired immediately, regardless of your schooling, your college, your MBA, your lack of skills. At that time, they would be considered lack of skills. Now there's no comparison. The kids today are much more. I'm looking at these CVs. They're much more impressive. The kids now, it's a much different, the profile that you saw 30 years ago today, night and day difference. It's a night and day difference.
So then what are some of the most in-demand, skills or qualities that Latin American financial services companies are looking for? What skills would be considered a lack of skills today?
What everybody is looking for is, listen, youth, energy. The big word, and that's just always been around for a number of years, is commercial. People need to sell themselves better. Mm-hmm. That's what banks love to see, whether it's research or sales. Listen, just because you're a research person and you sit in a cubicle, and I'm not speaking of the more senior people, but even the associates, people at the associate level, learn those skill sets. You are going to move up very quickly. Being commercial is everything. That means picking up the phone, calling. Don't do everything on the phone. And I remember sitting out a couple of years ago talking about the disappearing, pick up the phone or go meet someone for a coffee, face to face. That's commercial. You sell better when you're in front of someone. Someone gets to see you, gets to feel you, gets to talk to you. That's what they're looking for. That is a lost art in sales. But show energy, show that you want the job, show that you're sincerely interested. The best thing you could do at any level at a job interview is don't leave the interview, the first interview, the second interview, without asking questions. Engage. A lot of times people are like, geez, no, I don't need anything. I understand everything that's going on. Thanks very much. What's your plan in the next year or two? I noticed that you guys made these cuts 3 years ago. Is that something I should be concerned about? What's your feeling about Chile? What's that going to, engage with these people, ask questions. That's the biggest thing I think hiring managers love to hear and see, but it's lost.
So what about on the hiring side then? I'm curious, what percent of the firms that put out mandates like this are hiring from Latin America? So it's a bank based in Sao Paulo or based in Mexico City versus clients that are in the US hiring for New York and London. Is it easier for someone to get a job working with Latin America in New York and London, or are there more jobs in Sao Paulo?
I find that I do more of my work in Brazil. That's only because over the years, the powers that be, the heads of the group, New York used to be the power base for Latin America. That power base has shifted to Brazil. And I've seen that quite a bit. I think really now there's a handful of banks in New York that have actually research analysts. Some banks still do not have research analysts. Everything is based in the region, whether it's Mexico, Brazil. The only thing that's left in New York for a lot of these guys is just distribution, whether it's sales trading for easy client contact. I don't think that's going to change. I think and overall, it's the cost structure. It's much easier to have someone sit in Brazil than New York. Maybe Miami. Miami is now looked upon as, if I come, can I work from Miami? Do you have an office in Miami? I don't think banks are hardened anymore about, no, you need to be in New York. I think now they would prefer having these people based in the region for the simple reason it's the overall cost, again, much cheaper, but it's also you pick up a better local flavor of companies, what's going on, than you do in New York as an analyst. Obviously, the more senior established analysts don't have that issue, but young coming people, yes, you're going to want to be in the region where, I'm talking to these people every day. I'm meeting with them down the street for coffee. Like that's what they want. That's what their clients are going to want to see. That's the difference maker. I mean, I've always found, and I've always been told, again, getting into how you separate yourself from your competitors. If you look at 25 research analysts that cover consumer, they're basically talking about the same. There's not much difference. You need to separate yourself from the pack. And I'm sure people have been told this every day. It's hard. I get it. But those are the difference makers.
Yeah, I've made that point kind of tongue in cheek before, that I'll look at a analyst coverage page on a stock in Brazil, and it'll be all 12 of them with a buy rating, all within, it's 16 to 17, one's 16, 15, one's 17 reais, but there's really no divergence in the opinion. I've always kind of mocked
it doesn't vary that much. The other thing I've always shared tongue in cheek with research analysts, because research analysts are always like, Fletcher, how do I make more money in research? And I'm like, well, listen, it's difficult. But what I would say, going back to what I was saying earlier, one, you need to be more creative. Now, I don't know if you can't do this in the US, you can't do this in Europe. There's parts where you can still do it. You need to, as a research analyst, you need to develop great relationships, corporate access, CEOs, CFOs. You need to be sort of on the side a banker, which people are like, well, Fletcher, you can't do that. I understand that. I understand the regulatory of the Chinese wall and things you can't and cannot do. But if you're a research analyst and you're very good in your sector and people like you and they're going to, you're going to be able to originate some deals, that's the best way to get paid. And some banks will find a way to pay you, from over there, it happens. This is what happens. But that's the only way you can really do it in research. There's no magic sector. There's no magic bank out there where they're going to say, Jesus, we're going to give you X and exponentially, we're going to grow that every year. It just doesn't happen that often. But becoming sort of a 65% research person, 35% banker, and creating, and that does happen sometimes. It happens more in the US than you think, but it's hidden. But that's how you can really get paid. And if the bank really likes you, you'll be rewarded well for that.
Yeah, because I think too, it's definitely changed. I agree with everything you just said, but the commercial side is kind of a different personality type, right? Like a lot of the best research analysts are introverted and they want to sit there with earphones in and read 10Ks and they don't really want to be bothered. And the skill to actually go out and be personable and have a coffee is not necessarily the same skill set.
I love some of the younger people that are being creative, whether it's shopping malls or consumer, and they'll take an afternoon off and go to, they'll spend the afternoon in a shopping mall and sit down and watch different stores, what's happening there. What's the crowds like? What's the responses? And it helps them form and shape their narrative on that particular company or that particular property. When people go outside the office and really are amongst everyone else and they're just learning, that you get some great information that you never would have saw. It doesn't show up in a report, doesn't show up in any data points. But when you're out there, I'm not going to say you're driving, a big 18-wheeler on a mining and metals and mining, quarry. But you know what? When you start to see people, hey, listen, everyone's piling into this one particular store. Listen, they do that here in the U.S. I know they do it in Brazil. I know they do it in Mexico. People do it. It's not privy to just one country or one person. But I think those are the people that go on to become very, very good analysts. Leave the office. When you can, leave the office. And whatever your sector might be, go visit these buildings, go visit these stores, go talk, and that's where you get some great insight. And I see that quite a bit here in the US. I think those analysts have really they've done a very good job with that.
Yeah. So do you think that the Latin American banks value a digital presence like the influencers? I think like the US financial services got a lesson in it with the GameStop and the Roaring Kitty, where he's got 500,000 people on his YouTube video doing an analysis of a company. My experience in general in Brazil across industries is that they still haven't really put a value on influencer marketing and a digital presence yet, but the influencers that are huge drive sales. Like it's an extremely, like Brazilians listen to influencers, but the companies that should be using those influencers and digital presence. So like, can an analyst benefit from a digital presence in Latin America, do you think? And do the companies value it yet?
I think everyone else is sort of following the US and see how it works in the US. And they're taking the pros and cons, the failures and successes. I think you need to be very careful I would be shocked if any analyst in the US would quote or use information from like the Roaring Kitty. I think that is just opening yourself up to a lot of problems, a lot of issues down the line. Now, if you want to listen to that person and take bits and pieces from that conversation, maybe that person has something, they're saying something that does make sense. It confirms what you've been saying. That's totally different. I think people should be very wary of the meme stocks here in the US. I think, listen, no matter where you are, people want to make money. So they see the trading, they see the trading scales of a GameStop, an AMC. You got to be careful. You can lose everything. I mean, you don't know what money is in play. You don't know what hedge fund's going to come in around the corner and blow it out. I think people look at that naively. And I would also say ignorantly and say, well, wait a minute, my buddy just made, $4,000 on one trade today. I think I can do that. That's how you create more day traders, which listen, there are people that can do that. Not everyone can do it. And I don't think it's worth the risk. I just don't. And I'm from an old school where if you're really unsure about what you're getting into, stay away from it. Don't even get involved with it.
But maybe then I'll ask you about like less polemic names. I mean, for like a serious analyst, someone that's been in a bank for 10 years, do you think there's value to covering the companies we're covering anyway, but putting out information publicly that maybe traditionally was available only to bank clients? I mean, I follow a lot of incredible analysts that follow names that are obscure, right? You're not going to get famous on the internet covering microcap stocks because there's 3 people that care about the name. But
right,
there's still extreme
there's
value.
your issue. There is value in the small and mid caps, right? I'd like to see. I think I'd like to see Latin America. I'd like to see the analysts cover more obscure names, more small cap. But there's no money. To your point, there's no money in it. Everyone covers the same 100 stocks, 125, 130 stocks. And again, to what we were talking about, there's not much variation between analyst to analyst. I would love to see. You get an analyst, I don't know, maybe you create a sector or a subsector of, from a bank or consumer, et cetera. And you give that person 10 or 12 young names, small caps that are just coming up. Give them the opportunity to bite, because eventually if these kids are good enough, these people are good enough, they're going to start nipping at the heels of the senior analysts. They're going to look for more and more coverage, more and more responsibility. And eventually, if you don't give it to them, they're going to move on. So I think the best way to do that, to your point, is, there are a lot. And listen, I feel as of right now, market conditions aside, I feel like Brazil companies are starving for capital. I think that's coming around the corner. I think a lot of these banks, I think today, if you look outside your window, the markets don't look great. No problem. So be it. It's not going to be good today. It's not going to be good tomorrow. But I think if you look longer term on Brazil, the way it's positioned and how the global markets are slowly moving in the right direction, they are going to be on fire over the next couple of years. I believe that these banks are sitting on a ton of deals. The pipeline is strong. Yeah, it's difficult to bring these deals to market when the trading flows and the trading revenue, they're just not there. People are afraid. But I think later this year, hopefully later this year, I'm not an economist, I'm not a strategist, but I do feel very strongly, very bullish about the region, but very bullish on Brazil, on where things should be in the next 6 months to the next 2.5 years. And I love what I'm saying, but I don't think much can happen until, like any emerging market, you're taking your cues from the US. And until the US starts dropping rates, everyone else can start dropping rates, things ease up a little bit. I know you're on the cusp of what, 8.5%, 9% interest rates. Once that goes down another point, I mean, that's when the good times are going to be here for a while. And I think people know it. I think people know it. That's why I say, listen, today's probably not going to be a great day, tomorrow, but it's slowly turning, and it's going to happen. I would be not only am I very bullish, but I would tell people, be patient. Just don't worry about tomorrow. Just it's going to happen.
Yeah, I agree with you. I think the pessimism's a little overdone at the moment too. If you look at the long-term prospects, there's a lot to be optimistic about. So let me ask then, you kind of hinted at it about the cost structures when we compared, New York and London to the LATAM roles. So how do salaries compare then? For, say, an equity research analyst or associate that works out of Sao Paulo for a local firm versus a guy working on the buy side in New York City.
I'm sorry, repeat that.
How do the salaries compare for the roles in Latin America versus New York? I mean, my experience has been that the guys in New York make multiples for the exact same job as the guy in Sao Paulo.
Pretty much they do, and that's taken into account where you're living. Obviously, New York is probably, 25, 30% higher than it is to live in Sao Paulo. It's probably, but, it's maybe not as expensive to live in Miami. Mexico is cheaper than, I think the banks have done a very good job at, looking at those corners of the world and saying, listen, if you want to be based here, this is our structure. These are our they've already done those numbers and they know where people should be. Hence to early what we were talking about, where a lot of people like to be based. Well, they don't like to be, but the banks would like to have those people based in the region where they try. And listen, I applaud, and I've heard this for years, and I applaud the analysts and everyone who's based, especially with a US bank. If you're going to put me in Sao Paulo, can I get paid in US dollars? I'm sure you'd love to get paid in US dollars, but that's not it doesn't work that way. I had a guy, I can't recall his name, but I remember him saying, Fletcher, you know what? I've been hearing this complaint for a number of years. And if you look, and I think he did some spreadsheet over 20 years where he looked at that. He looked at those numbers, the real versus the US dollar, back and forth. And over a 20-year period, it almost averages out. Like, you've had some bad years, some good years. That was a couple of years ago. I don't know where he got his information from. I took it with a grain of salt, but I could almost believe it being a manager. Obviously he's pushing his narrative, but I almost believe when it's all done. Listen, I'd much rather be paid in a US dollar. It's just not, it's unlikely. It's very hard to do that. And I get that question all the time. When I'm working with the US banks in the region, candidates will always ask that question. I can ask that question. I can tell you what the answer is going to be. It's probably unlikely.
Yeah. I think to contextualize too, there was a study that came out by FGV and they looked at the tax returns from 2022 or 2023. And a top 1% salary in Brazil is around 30,000 reais. So divide it by 5 now, which means you're making about 72,000 US a year, is a top 1% Correct. Salary here, which for a lot of entry level, I mean, I don't know, maybe the interns at Goldman Sachs might make more than that per month when they're in college still. So it's pretty low compared to what you would see in New York salary.
Oh, and I would say that those spreads are probably growing only because I think New York is becoming more expensive to live. But on the flip side, I know people who would listen. I was talking earlier about people that would like to trade from the sell side to the buy side and going back. I know people who would at one point, there's times where people would love to be in New York and work in New York for 2 or 3 years to be a more well-rounded analyst or salesperson or sales trader. But now I don't see that many people looking to move to New York. People are happier in Brazil. They understand where the financial thresholds are, so there's not an issue there. I think most Brazilians would love to be in New York for a year. Listen, if you're young enough, you're single, yes, come to New York. I think if you have a family, I think you start working up numbers and you say to yourself, well, if I have 3 kids, an apartment, and private school, I'm going to need X. And a lot of times those numbers aren't even close. So now I'm not saying the push for locals to move to New York as much anymore. Banks don't really want to get tied up with sponsoring. They prefer to look the other way. It's just too much aggravation. Green cards are Trump. That's the easiest way to move around. If you're fortunate enough to have one, then it's great. But getting the H1, it's banks have almost made it so they just discourage it. I know that's not what they're supposed to do, but it's just too hard. It's just too hard and too costly.
I understand it. I see it on the same side. The Brazilian banks, so if you're a foreign candidate and you want to come live in Sao Paulo, it's probably the same thing. The process is just a pain in the ass. They're going to basically pay someone in HR to work a couple days a week or a couple days of their month.
That's correct.
It's a huge time commitment. And then there's lawyers involved. And I don't know, especially when you can find another candidate.
Well, and that's what, in the end, that's what a lot of people end up doing is they're just saying, listen, Fletcher, can we narrow our search down? Can we just look? And sometimes you go with the path less resistant. I mean, it's just you go with a person who may not be as qualified, but the person's already there. He's down the street. Just call it a day. And I think that's unfortunate, but that's been like that. The very, very truthful, that's been like that for a number of years. But I don't see as many people pushing to move to the US. Truthfully, if anyone's looking to move, the Brazilians I see more of a push towards Europe than I do the US. And I thought that was odd. And that, Portugal obviously makes the most sense, but London listen, if you don't want to go to New York, you don't want to go to London. And I used to tell back in the day, I remember speaking with a number of clients, they're like, well, we'd like to have someone in London based or, a Brazilian. I'm like, listen, that's not going to happen. And they're like, what are you talking about? I said, the guy's 27, 28 years old. He's not going to do it. He's got a girlfriend. Well, that's the great, no. You don't understand. He's going to come over. You're going to pay him, an expatriate type package to come over for a year. His apartment's going to be subsidized. He's going to be living on, King's Row. It's going to be phenomenal. He's going to love London. And then his girlfriend's going to come up. They're going to travel. They're going to have a great time. And then after that first year, those subsidies go away. And then then it's just the
cost of living in London.
In London, it cuts in half. And then all of a sudden the girlfriend's like, okay, well, we went to Paris 3 times. We went to Madrid. We went to Milan. By the way, where are the beaches? Back in Rio. She goes, I'm leaving. She leaves. He leaves. I can't afford to live here anymore. I mean, it's the greatest story because I hear it all the time, and I try to tell people. And listen, right?
There's no path to moving to the EU anymore, right? Like you don't get the residency. You can't do London for 3 years anymore, and then say, okay, well, fine, I put in my time. Now I'll go live on the beach in Spain. And then you just got to go through the same visa process again.
That's exactly it. And now that it's Brexit, you have to go through another whole set of obstacles and restrictions. And by the way, and that's not a knock on London. I love London, but from a human side and a human personality side, you can see what happens. These people are ready to go. And as I said, once that money is gone, they're like, you can't, I'd have a tough time living in London, downtown, in the city.
We have a few Brazilian friends that did local Brazilian banks, like multinationals, for a few years out of college. And then their goal internally was to get transferred. And they managed to get themselves transferred to London, a couple of them, and they barely get by. I mean, they're not, they have roommates. Yeah. Their disposable income, I think, if you were to, how much can you save at the end of the month, would probably be higher if they lived in Sao Paulo still.
Yeah. And that's why I don't see the push to leave Brazil as much as I used to. I think that changes. I think that changes every several years, depending on where the markets are, where countries are. Obviously, inflation across the board. There's nowhere you can escape inflation right now globally. So I think everyone's hurting no matter where you go. You can't hide. But London, those were always the stories. And people were like, wow, Fletcher, you were right. He left after a year and a half. I said, I could have told you that. And I said, how long was that package for? He goes, oh, it was only for 1 year. I said, they're like, we won't do that again. Now, what they've tried to do, and I think you probably can get away with this just because geographically it makes more sense than New York. You can cover UK, European clients from São Paulo. There's only a 2 or 3 hour time change, much easier than New York. You hop on a plane. It's not that hard. I've seen banks really listen. When I started in 95, there were banks that actually had Latin American equity research people based in London. That's how old I am, and that's how old the markets are, where you had dedicated people there. Those days are long gone. You have a handful of Latin American banks, a handful of Latin American sales and sales traders there, more EME. People have tried their best to squeeze Latin America into EM in London. I don't think it really works very well. I think every time they do it, they miss the trade, meaning, if you're a big bank, you're like, well, listen, if we have 4 or 5 guys here, we can consolidate this into one EM desk. We don't need dedicated LATAM people. As they say that, Latin America is on fire. Their clients in Eastern Europe and UK and everyone's talk about Latin America. No, we just want Latin America. Well, you don't have Latin America anymore because you've just moved them over to EM. So then you want to be, we do have Latin American people. We do have dedicated Latin American people covering these companies. So these banks always seem to miss this trade, but I see that quite a bit as well. And I've been asked that question a number of times. Can it be done? Of course it can be done. I don't know how much your clients are going to like it. I don't know how much the salespeople are going to like covering other areas other than LATAM.
Yeah, it's hard too because it's so big, right? If you took all of Latin America as an economy and combined it, it's the 3rd largest economy in the world after the US and China. So trying to just group that in and say, we do all of LATAM, good luck. I have a hard time covering all of Brazil, and I try and cover Mexico too, which is its own huge economy. Argentina is a story in and of itself, right? You could hire a full-time Argentina analyst right now with what's going on. So it's hard. And then if you want to throw Latin America in with Turkey and Morocco and all these other countries that are completely different culturally and economically, it's an impossible job for the analysts to do well.
It's hard because buy-side clients, you have to be on their beck and call. At the end of the day, Brazil is 90%, 92% of Latin America. But you also want to have an insight into the Andean region, Peru, Chile, Argentina. You want people to know what's going on there as well. It's hard to have these dedicated platforms, which, by the way, have disappeared from the big US global, European global banks have all sort of left Chile for various reasons. It's easier to just have 1 or 2 dedicated people based in Brazil or New York, cover it from there. They can do it, not a big deal. You're touching on it. Brazil is still, out of all those countries, and again, going back to why I'm so bullish, if you just look at the natural resources of the country, it is a machine. Gas, oil, metals, mining. You have 200 million plus consumers. It is a very, very good market. It will be and as it keeps maturing, it's only going to get stronger. And I think the mistakes are being less and less every few years. You just don't see Brazil does not revert back to, we were doing this. No. They're moving forward, which I love. That's the growth you're looking for. That's the growth I see and hear from global investors. But again, you may not see it today, but it's coming. And it's unfortunate because I had pushed pretty hard. I thought the start of this year, you were going to see it immediately. You haven't seen it. We're almost midway through the year. So I still think it's going to happen maybe later this summer, but it's going to happen.
Well, let's go back to the job market then a bit. Is it a better market right now for candidates or for hiring managers? Is it a buyer's market or a seller's market if you're a company looking to hire one of these professionals?
I would say it's going to be more of a buyer's market with the banks for the one reason today. Well, there's a couple of different scenarios. Because of the last year and a half of redemptions of buy side in Latin America, those analysts have to go somewhere. So then the sell side picks up that slack. So now they have not only their sell side candidates they can choose from, whoever's available on the street, et cetera. Now they have another pool of talent coming in from the buy side who are going to be much more receptive now to returning to the sell side because they know there's more stability. Might be less money, might not be exactly what they're looking for. There's more stability. So I would say right now, the banks have the upper hand when it comes to selecting process, choosing of candidates. Having said that, I think that window is slowly closing. For what I've just been saying, I think you're going to see a real bump this year and the next year on the growth market of Latin America, and those pools are going to be dried up. Also, you have new entries into the market. You have Jefferies, you have Deutsche Bank, you have maybe an RBC, you have Scotia that's building out, you have Safra that is rebuilding its equity platform, you have BBVA, you have all these new banks, different ideologies, different strategies, but they're coming back into Brazil and they are taking bits and pieces of different product areas, but that means they're also taking bits and pieces of very good talent. So yes, they do. Yes, these big banks, established banks have the upper hand, but I think that window is slowly closing for those reasons.
What about the neobanks that, American investors ask me all the time about Nubank, Banco Inter, they're listed in the US. Do they do anything different when it comes to research compared to, say, Itaú or Bradesco?
No, but I don't think they do. But I think, it's funny. I had this conversation with a bunch of people a while ago. I think they were smart to be listed on the NASDAQ, and not to knock the Bovespa, not to knock back. What's happening is as Brazil grows, the middle class grows. That middle class gets more educated. They have more money, more discretionary money. They're more investing. They want access. Yes, it's nice to have access to your local companies, your local markets, but they want the ability to buy Apple, Microsoft, NVIDIA. They want global access. Banks are trying to give that to them. Hence why now when you start to see some of these fintechs, when you start to see Nubank, you start to see these banks, they are listed on NASDAQ, and you're starting to see a shift only because it helps them out over the longer period of time. I've seen that for a long time, and you're starting to see banks make those changes. If you look, they really have a great model, but I always looked at XP Securities as the Charles Schwab of Brazil. And now you have a number of banks nipping at their heels looking for that same market share. The private banking, wealth management, people want that ability to trade not only Latin America, but trade US, Europe. And these platforms are growing quite a bit. So I think, I don't have the numbers in front of me and I would be speculating, but I would think XP has lost some market share just because of the growth of all these other companies that are sort of growing very rapidly. I mean, they're still probably the model, but you're seeing a lot more, I don't like to use the word discount brokers, but discount brokers showing up in Brazil. That is what I'm seeing quite a bit of. That's the big move for the past year and a half.
Yeah, and to your point, XP very recently launched international investments via their domestic platform. So now you can buy Apple stock directly from your Brazilian, which is very new. It wasn't like that. There's even startups now, Nomad, where a Brazilian can get a U.S. bank account now in their own name without having to go to the U.S. or anything. They just open it for you. So there's been a proliferation of international access for sure.
Which I'm sure regulators don't want. It sounds good, but you're like,
yeah, there's so much.
That's the issue.
And it's hard. It's such a hard trend to stop. It's such a hard trend to stop. Everyone's on the internet.
Yeah.
They can Zoom each other. So, I mean, what real justification do you have to say, no, Brazilians can't buy Apple stock or can't have a bank account?
Oh, right? I totally agree with that. Listen, their money is just as good as everyone else's.
Yep. So let me ask you one more then. I want to ask you about a recruiting question, a kind of fun question. Is there anything unique or different about recruiting in Latin America compared to elsewhere? So, I have a friend that's a recruiter, and if you were talking shop with him about Latin American companies, is there anything funny or unique about the hiring process or working with these companies that a recruiter in the US might go, really? They do it like that?
No. You know what? I have to think the basics are still there.
Yeah.
You're representing your company. You're representing your candidate. I think it's the nothing really changes. It's still, you're taking a person, you're vetting them, you're holding their hand throughout the whole process. You're working with the client at the same time. You're pointing out the pros and cons of certain candidates. They're pointing out the pros and cons of certain candidates. At the end of the day, people are still looking for the best possible candidates. They don't settle. I know a lot of clients that Fletcher, thank you. We've seen 35 people. We haven't really found the profile we're looking for. Let's just keep going. I mean, that's where we are. I think managers have become more savvy, but I don't think it's, if I was covering US, if I was covering Europe with the banks, it would be the same process. The one thing I have seen when I started, and this happened for really up to about the last 10 years, I would always be engaged with the hiring manager. I would always have my set of clients and I would speak to them directly. And they would say, hey, Fletcher, listen, this is what we're looking for. This is what we need. And it wasn't so formal. Like it wasn't like contracts and HR and everything. It was, this is what we need. Show us, Fletcher, we like these people. Can you show us more of this? The process from start to finish was much quicker, more efficient, and easier. I would say now those hiring processes have tripled in time because more people are engaged. When the hiring manager calls you or says something, hold on, let me get HR involved. HR has to go through their whole vetting situation. It's when I talk about compliance, I mean, it almost halts the process for a couple of weeks. And I know everyone's doing their job. I don't, but now it's tripled the time from start to finish. Whereas when I started, it would happen in a snap of a finger. The comps, done. Let's get them an offer out. Let's get them started immediately. Now it drags on quite a bit. And for many reasons. I mean, I think these banks, I think these HR groups, listen, HR has turned into, for almost all these banks, they've created in a great way, they've created a mafia. There are so many HR people right now, they're the gatekeepers. They make the decisions of the bank now. And they're very guarded. And they want to make sure that, T's are crossed, I's are dots, which I absolutely have no issue with. But that does, and at times can slow the process. Whereas when you're for working directly with the HR or directly with the line manager.
So when you prep a candidate for an interview, then do you give them any cultural tips? Maybe if you had an American candidate that was going to interview with a group of Brazilians, would you tell them anything about the culture if they weren't like, I mean, I would tell someone the conversation starts with bom dia. You say good morning, and like they're going to want to talk
except after 12.
Right.
Right.
Right. Yeah, you got to get that right. It's got to be good afternoon or good evening. But like, is there anything culturally that you advise candidates?
No, it would be no, because you know what? I have to tell you, these kids now have done their homework. In other words, if I'm taking someone born and raised in Wisconsin and they're applying for a job at Itaú, they already know what they're getting into. They've already done their homework. They've done their research. They've gone online. They've linked in the people they're going to be meeting with. They've checked out, they've done that homework themselves. There's nothing I can really tell. I mean, I will if maybe you're coming now where that may apply more is if you're coming from Mexico and you're applying for, a Brazilian job or vice versa. Mm-hmm. Now, the cultures are a little bit different there. I think Mexicans are more reserved, more conservative in their dialogues, whereas Brazilians are much happier, much more open, more engaging. There's not a right or wrong. It's the DNA. Now I'm going to get all these bad emails from people in Mexico. They're warmer. Brazilians are more just happier, warmer people when it comes to the process. And in different ways, they will get the answers they're looking for. Whereas during a conversation, they will get the answers they're looking for. In Mexico, they are very, very point blank. They are very professional. They're very, very stern. But they are, listen, when Mexico is hot, there's not a better place to be and work for than in Mexico. But those are the cultural differences I see in the 30 years. Chileans are a little bit more like Mexicans. I mean, there's just nothing like Brazilians. Brazilians are just, and we used to laugh all the time. They're when things are good, they're the happy. They're sipping champagne off the back of the Titanic. Things are great. When things are bad, they're like nothing's as. That's the one thing I always have to tell people, non-Brazilians, is the Brazilians are never middle of the road. They're either very, very high or very, very low, which makes it great. I mean, I think it's phenomenal. I love working with that.
Yeah, it's great. They're great people. I think that's a great lesson too for anyone that even just invests in it, that emotionally the highs are higher here and the lows are lower, and they both tend to be overdone. So they're extremely
It's never as bad. It's never as bad as you think
no.
it is. But but here's the great thing. I'm reminded of that every day when I speak to someone. If I'm speaking to someone in Rio or Sao Paulo, I have to be for my own personal life or something that's going on in my. I'm like, wait a minute, it's not as bad as it really is. I have to, and that's what I love.
Especially on the ground here too. If you just followed the internet about what's going on in Brazil the last 2 years, you would think it's about to crash and it's not going to exist anymore. But in Sao Paulo, they're still building, opening new restaurants, life goes on, and things are good.
That's right.
So last question, Fletcher. You touched on it a bit, but what advice would you give a young American, a young Brazilian, Mexican finance student that wants to go into financial services and work with Latin America?
Make sure, and I would say, and it has, whether it's financial markets, tech, whether you want to open up a coffee shop, be passionate, show that you want to be there, show you want to do it, show you want to learn, show that you're okay to make mistakes, but more importantly, show the passion, show the energy. And I think those are the qualities that banks are looking for. The worst thing you could ever do, and I see this sometimes even to this day, when you sit down in your first interview and you're across the table from your potential boss, after saying, hello, how are you? The next question out of your mouth should not be, how much time do I get off for vacation? And what's the starting? Listen, don't ever talk about benefits. Don't ever talk about salaries. Don't ever talk about money. Me personally, the best advice I like to give is, again, show the energy, show why you want to be there and you want the job. Don't even talk about business or the bank for the first half hour. Talk about the person's family. What do you do? Do you have kids? Do they like baseball? Do they do this? Don't even get into the work. Obviously, you know what they do and they know what you do because they have your resume. So they know why you're there. So don't be a robot. Don't get into, don't be regimented. Sit back, relax, and talk like you're at a coffee, you're at a Starbucks, and just talk about the family. Talk about, what's your background like? What do you like here? What don't you like? Don't even talk about the job. Let him bring it up. Let him dictate the meeting. Is what I can give young people.
That's good advice. So thanks so much for doing this, Fletcher. Where can listeners find you on the internet, reach out, learn more about Buzios?
Well, except for Instagram and any of those crazy ones, but I'm on all the professional and the business social sites.
Great. And I'll put your LinkedIn in the show notes for anyone listening. Thanks so much for doing this, Fletcher.
Outstanding. You're the best. Patrick, thank you so much for your time and your questions. I enjoyed being here. Thank you.
It was a pleasure.